beyond this and get more on the trend for global FX. Joining us is Rishaad Yetsenga, Global Head of Foreign Exchange Strategy at ANZ Banking Group. Thank you so much for joining us, Rishaad. Well, Aussie dollar taking a bit of a hit today. Do you see further weakness, and how does the Reserve Bank here interpret what was a bolt out of the blue, really?
Look, for the central bank, I don't know that today's numbers are too problematic. I mean, they're on the cusp of cutting rates anyway. In fact, they essentially signalled yesterday that as long as the CPI number is okay, they're easing in May. So this adds to the case potentially that we might need to think of about another rate cut after May. But as I say, it wouldn't be too troubling. For the currency, though, it does add to, a range of issues which have started to undermine the Aussie dollar. Looking for the Aussie to be weaker against the New Zealand dollar is consistent with our view, but I guess the breadth of concern we've seen across the trade account, thinking about rate cuts, still some doubts out there about how China might be doing. We really need a strong opening from Chinese markets tomorrow, I think, or the Aussie dollar is going to stay under pressure.
Richard, Susan here in Hong Kong. What is fair value for the Aussie dollar? Because some say that even at these levels, the Aussie might be overvalued given the fundamentals and given that we're expecting a rate cut at some point.
Well, when somebody wants to talk to me about fundamentals and currencies in the same sentence, the conversation gets tricky right from the get-go. But if you think about long-term measures of the currency, some were saying up at 110 it was as much as 50% overvalued. I don't think they're right. I think the changes you've had in the structure of the Australian economy, say fair value might be in the low 90s, 90 cents maybe. So certainly we're still above that. And we, I don't think we're heading down towards that sort of level anytime particularly soon. But that's probably where fair value is from a longer-term perspective.
Okay, so you don't like talking fundamentals. What would you prefer? Would you prefer emotion than sentiment instead?
Well, it makes more sense.
Yeah.
Look, I think all that matters is supply and demand, right? I mean, people talk about fundamentals. I mean, I can hear the Japanese finance minister talking about the yen not trading in line with fundamentals. At the end of the day, someone wants to buy and someone wants to sell, and the price is the price. It's just a judgmental decision about whether that's consistent with fundamentals or not.
Richard, I'm sure you've read the last minutes from the Fed, and of course that's the big influence that we're getting as far as trading goes. Well, what do you make of a lack of another liquidity injection, and how, at the moment, does that play out when it comes to the dollar? Do we see now perhaps more confidence that there isn't going to be QE3 and that the dollar strengthens?
Look, the dollar can only benefit from good US news, I think, when you have doubts about China and when the market has doubts about Europe. And the recent news flow has really, had that sort of setup. Yes, the Fed at the margin said probably no QE3, certainly unless the economy weakens, but our central case is the economy is okay. In Europe, the last round of PMIs were pretty ordinary, and in China, of course, the latest run of data in the market's mind has been somewhat inconclusive. Again, another reason why I think the opening of Chinese markets is important tomorrow, not just the equity market, but what Chinese iron ore prices do, what Chinese steel prices do. Both have been trending upwards for quite a few weeks now, so actually are saying the Chinese economy is in reasonable shape. If Chinese markets can open strongly tomorrow, you have some offset for the relatively dollar-supportive news coming out of the US. At the end of the day, the US still has a reasonably big current account deficit. Rates are still at zero. I think the dollar's still a weak currency.
Very quickly, I just want to pick up on, again, Susan, going back to fundamentals and looking at the euro. You mentioned the PMI data, and, typically Australian, you said they look fairly ordinary, those numbers. Now, with that in mind, at 132, I mean, what happens? What's supporting the euro right now?
Look, that's a good question. If you look at a very simple relationship between the euro and German-US interest rate differentials, it suggests it should be 126. In fact, that interest rate spread just is on the cusp of making a new recent low. I think that's a good case in point where when you talk about fundamentals and currencies, it's not always clear. The euro is going to run a small trade surplus this year. The US still runs a big trade deficit. European savers are repatriating foreign assets because their domestic economy looks pretty awful. I think that's why the euro is in okay shape and why it won't collapse.
Interesting. Again, cheap loans as well doled up at the LTRO may support the currency. All right, Richard, we're going to continue this conversation after this short break. We're going to pause here on Asia Edge and we'll get more from Richard Yetsenga on currencies, and take a look at the other top stories when Asia Edge returns. Welcome back to Asia Edge. Taking a look at global currencies, Richard Yetsenga, global head of FX strategy at ANZ Banking Group, rejoins us from Sydney. And Richard, you're talking about how you don't have that much belief in dollar strength. So what's the best bet against the dollar cross right now?
Look, I think the puzzle with dollar strength, or the way to play dollar weakness rather, I think is influenced by two things. One, where the long-term flows really are, which still largely are emerging markets and the commodity currencies, I think. But secondly, also, where are policymakers less upset about currency strength? So that steers you away from places like Brazil, particularly, and I think towards places like Canada and Mexico in the short term. But also, once the China growth cycle gets up and running again, which may be imminently, I think Asian currencies are still going to do extremely well.
Okay. Which particular ones? I know you've been talking about the Korean won quite a bit.
Yeah, look, Korea has a very strong fundamental story. Well, I mean, the only real negative in Korea is the fact that Korean companies continue to invest offshore in productive capacity, but that's occurring in most advanced economies in the world, and at the end of the day that returns to some extent through profit generation into Korea. Korea is still a very under-owned fixed income market from a global perspective, and Korean exporters are still extremely competitive, so the trade surplus is still quite strong. And let's not forget the Korean won actually hasn't gone very far since the crisis in terms of appreciating. There still seems quite a lot of room left, I think.
We can't talk about currencies without talking about the yen, because it looks like it's going to break through 83 once again at some point versus the US dollar imminently. But where do you see the yen going?
Actually, I think dollar yen's going to go back down. I think the yen's had a period of weakness on the back of, most importantly, a Japanese current account deficit and a signal from the Bank of Japan they want to become more aggressive in terms of easing policy. The reality is they haven't become any more aggressive. In fact, the Japanese money base is falling relative to the US money base, which should be yen supportive. And the current account surplus in Japan has come back and will probably get larger in the next few months as exports recover. So I know the consensus wants to look for dollar yen higher, and domestically Japan is in nothing less than pretty ordinary shape. But I think relative to the dollar, the current account surplus will win. Dollar yen will go down.
Interesting. Okay, Richard, thank you so much for your time. Enjoy your Easter weekend. Richard Yetsenga.